Guys, welcome to another Damilola Forex Academy teaching. In today's teaching, I'm going to be exposing the rules that are going to help you trade the multi-time frame analysis like a pro. You all know that we have an organized price action multi-time frame system that we use in making massive profits in the Forex market. So I'm going to be exposing these rules that are going to help you take you from that amateur stage to the professional stage. And I'm also going to be going to the real life charts using GBPUSD for our example on how to apply all of these rules. Okay, so starting out and going through the rules, what is the number one rule we have here? It says that what? Top-down analysis should be your go-to system. This means that if you want to apply multi-time frame correctly, you cannot pick and choose time frames. You cannot just start from the daily and go to the monthly and go to the 1 hour and stuff like that. It has to be organized. Okay, so that is, you have to take it from the monthly time frame to the weekly time frame to the daily time frame to the 4 hours time frame to the 1 hour time frame, or even at minimum the 30 minutes time frame for a real-time trade entry opportunity. Okay, so either or, you have to read the market regressively. Okay, and that's where top-down analysis comes in. And why do we apply top-down analysis? This is because it allows us to see the big picture from the monthly time frame, and we are able to use what we see from the big picture on the monthly time frame, correlate it with what we are seeing on the weekly, daily, 4 hours, and go ahead and pick a real-time trade entry opportunity on the 1 hour time frame. Okay, so it's important that you apply top-down analysis in order for you to trade the multi-time frame system correctly. Okay, so what is the next rule right here? It says that what? The multi-time frame exposes the overall structure and direction of the market. Okay, so when we go on to the monthly time frame, it allows us to know where prices are going overall, and it allows us to know the overall structure of prices. Okay, and we are now able to go on to the 1 hour time frame and trade. Okay, if we are trading in the direction of the monthly time frame, it means that what? We are trading in the direction of trend. While if we are trading against the direction of the monthly time frame, it means that what? We are trading a retracement. But either or, we make money trading retracements and trading in the direction of trend. Okay, so what is the third rule? It says that what? Keep bracketing prices into range of focus on every time frame. You all know that when we go onto the chart, there are so many information. Okay, so how do we slim fit this information until what? Until we get an information that is the most essential or the most useful for us at this moment. It is by what? Bracketing prices into range of focus on every single time frame until we now go on to the 1 hour time frame and we only have a small piece of information which would now allow us to be able to trade the markets within smaller structure circles, trade the market within smaller fractals, so that we are able to take profits and compound. Okay, we don't like long, even though we start from the monthly time frame, we don't like long swings. At maximum, we like short swings. Okay, so we want to be able to pick a trade entry opportunity at maximum, hold for a week. Okay, and at short term, hold for 1 to 3 days, depending on how the market moves fast into profits. Okay, so what is the next one? The next one says that what? Every time frame should be on either, okay, entry time frame should be on either the 1 hour or the 30 minutes. Like I said, even though we analyze starting from the monthly time frames, and I've seen a lot of people ask me this question, it doesn't mean we pick our entries on the monthly time frame. Okay, picking entries on monthly time frames are for position traders. These are entries that you pick and you can swing for like 6-7 months. But for us as retail traders, we want to be able to compound. We want to be able to turn that $100 to $200 to $300 in the nick of time. Okay, I'm not saying over leveraging and stuff like that, but at least we want to be able to do it within good time. Okay, so this means that what? This means that our entries will be on the 1 hour time frame, or at minimum, which I rarely do, is go to the 30 minutes time frame to pick an entry opportunity. Okay, so what is the last rule right here? It says that what? Trade within structure circles. Okay, so what are these structure circles? These structure circles can also be known as fractals. Okay, these are the current active structures of the market. Okay, and I've taught fractals in several of my teachings. In fact, if you want a full course on fractals and every other aspect of chart structure and price action trading, I have a full course on it. Link is in the description below. You can click the link and join multiple winning traders that are in my community, and you guys can make money and learn together. Okay, so now that this is done, what are we going to be doing? We are going to be going to the real life chart briefly to apply all of this system. Okay, so like we said, we are going to be taking what? GBPUSD. And the first thing we do is what? Is to come onto the monthly time frame, which you have seen. And what do we do on the monthly time frame? We identify the real-time zone where price is at on the monthly time frame, which you have seen to be around this zone. Then what is the next thing? The next thing is to read the entirety of the structures that took prices there. Okay, on GBPUSD, GBPUSD is clearly bearish in its entirety. If I even slim up the chart, you can see that what markets has been falling. You can see market has been falling in its entirety since 1971. The GBP has been weak in comparison to the USD, but we are just going to expand it and take it from where our screen can capture boldly. Okay, so that is from this high. Okay, already from 1975 we've seen prices bearish, so we are just taking it from where our prices can capture boldly. So from here we can see push. All of these are exhaustions. Okay, all of these are also push moves again. Okay, let's draw it out, pinpoints. Yes, from here, all of these are also push moves again. All of these are exhaustions. Okay, this is first wave of exhaustion, second wave of exhaustion. Then prices continue by making push move again, all in clear bearish structures of lower highs and lower lows. Then all of these are wave of exhaustions for eventually a continuous push to continue the bearish movement that price has been on since 1975. Okay, however, it's also important to note, right, that in a bearish structure, after a push and this exhaustion, right, for us to be sure that the exhaustions are completed, we must see what? A break of structure. Without a break of structure, it means that what prices can still grab an higher low and still push on a little bit higher before eventually now breaking structure to continue the bearish move. Okay, so this means that what? This means that without a break of structure, it would mean that the bulls are the most current active structures in the market. What do I mean? Okay, so here we saw prices came for the exhaustion, right? We said this move is an exhaustion move where prices eventually is going to grab a lower high to continue the bearish move. However, it's important to note that this exhaustion move, we have not seen a break of structure. This means that the bulls are still the most active structures on the market. Okay, so what are the structures? From here, we can see prices make push, an exhaustion right here, push, an exhaustion right here. All of this move, push, an exhaustion right here for prices to go ahead and make this push. Okay, so what are we saying? We are saying that what? That this low right here is what? Is the last higher low of prices. You can see the low right here is the last higher low of prices. Eventually, when prices breaks the last higher low, then yes, the sellers are now ready to take over prices, and any buy will be a retracement for a continuous push to make the lower low. Okay, but as far as this moment is concerned, the last higher low, which is right here, has not been violated. In fact, all of these lows right here have not been violated, and these lows are still holding prices very, very strong. Okay, so this means that prices, in fact, can still push ahead to a little high right here, then eventually make another higher low before breaking structure. So far, it maintains a lower high in comparison to the previous high right here. Okay, so far it maintains a lower high that's lower than this previous high, then yes, we are sure that the peers are still in charge of prices. Okay, so now what are we going to do? We are going to take that information, which is what this window. Remember I said keep bracketing price into what? Range of focus. Okay, so from here to this low right here is going to be our current range of focus that will take to the weekly time frame. Okay, in order for us to express what is going on the weekly time frame. So what did we see on the weekly time frame? On the weekly time frame, right, from here we saw all of this move. Price made push and exhaustion, then prices came here, made all of this push, made an exhaustion here. Within the same structure circle, prices came, made this push, then prices came, made this exhaustion at this support level here. So when prices got to this support level, what did prices do? All of the bearish structures that brought prices down to this support, all of the bearish structures were violated, which means that this level that prices grabbed as support can also be known as a support PRA. PRA means potential reversal area. So all of the bearish structures that brought prices down for that support, all of the bearish structures have been violated. Okay, we all know that if we are selling, it's a retracement in this case because the bulls are still the most active structures on the market. So this means that what? If we are buying, it's in the direction of trend, and if we are selling, it's a retracement. Until what? Until we see what? A monthly close below the last higher low. When we see a monthly close below the last higher low, then yes, when we are now selling it in the direction of trend, and when we are buying it's a retracement. But as far as this moment is concerned, because the bulls are still currently in charge, okay, and the last higher low on the monthly time frame has not been broken, it means that what, if we are buying, it is what, it is in the direction of trend. Okay, so now when the break of structure happened, that is the last lower high here got broken, it was an opportunity for us to buy in the direction of trend to this level right here, which would now be known as what, as a resistance point. Okay, so let's take this up a bit. So all of this will now be known as what, as a resistance. So we can even go ahead to tag it as a weekly resistance. Okay, which is where prices went to. It went to what, the weekly resistance point. Okay, so now what did we do? We went ahead to the daily time frame, in order for us to see real-time trade entry opportunities. Okay, so one thing is certain, we can see prices rejecting at what, at a support PRA here, and prices also, prices rejected originally at the support PRA where it grabbed that bullish move and headed in the direction of trend to this weekly resistance, which is where prices is currently reacting. Okay, so what were the structures that took prices from this support PRA to this weekly resistance? Okay, first of all, starting from the low, we saw prices make big structure circle here. Like I said, if you want a further course on structure circle, I have a full course on it. Link is in the description below, and you can subscribe on my course where I expose every single detail about structure circles to my students in the course. Okay, so this is the first structure circle here. Then what the prices do, it made a second structure circle. And what the price do, it made a third structure circle here. But eventually, prices now came and made what, a big structure right here. And we all know that what, a break of a big structure affects all the small structures behind it. Okay, but we've not seen a break, right? So this means that what, this level right here is now what, the last higher low currently within the confines of structure. So right here, I'm going to tag it as what, as daily support, okay, within structure circle. So I can just tag it as a daily support. Okay, so that means that what, that all of this structure, all of these small structures here, this big structure right here is what, is the low point, which is the daily support. So what are we going to do? Remember, we keep bracketing price into range of focus, right? So this means that from here to here is our new range of focus. This is our most important information on the charts right now, okay, within the daily support and the weekly resistance points. Okay, eventually when prices, or if prices comes and breaks what, and breaks the last higher low, then we'll now have a new range of focus. We'll now trade between this daily support and this support PRA here. But right now, our trade entry opportunity would be what, within this weekly resistance point to this daily support. Like I said, we'll have to keep bracketing prices into what, range of focus, until we see a real-time trade entry opportunity. So we'll take that window to the 4 hours time frame. What is going on within this 4 hours window right here? Okay, so from the low right here, which is this daily support, we can see price make push and exhaustion. The price started a new structure circle here, push and exhaustion, and started another structure circle here, push and exhaustion. Then right here we saw price make push and exhaustion to this point. This is the last higher low point of prices. Then we now saw prices made another push right here. Then all of this movement right here. In fact, before this particular movement happened, let's go ahead and see that particular trade entry opportunity. As at that point, this low right here was what, was the last higher low of prices. This low, let's make it pinpoint. All of these lows right here, before prices came and made all of this bearish move, this was the last higher low point of prices. So here it was a situation of prices pushed to the top and came back to sit on this last higher low. So what was that trade entry opportunity? Before we even talk about what our real-time trade entry opportunity is, first of all, let's push this monthly resistance to the highest point. Okay, so as at that point, we saw within this window, which was our range of focus, we saw price start on small structure circles here. Price made push, exhaustion, prices made all of this move, push, exhaustion, made another small structure circle again. Then all of this push move, then came to sit down on this support level. Okay, so at this support level, what did prices do? Okay, we saw prices break the entire structures, which is what? Push, exhaustion, push, exhaustion, push, exhaustion, again small structure circle, eventually establishing big structure circle, push, exhaustion, push to this level, came for the exhaustion, push to this level. Then what happened? Prices broke structure, and after a break of structure, we don't enter directly, we wait for what is known as a discount. That is prices coming back to 61.8 to give us that opportunity. Okay, so this is supposed to be our original take profit, right? However, I always teach my students about obstacle. Okay, that's what, you can decide to walk away at obstacle levels and take profit at obstacle levels. So now, what is the current obstacle level? We'll bring out our 61.8, our Fibonacci from the high here to the low at this point. So this 61.8 here is what is our obstacle level, and this was where I decided to walk out of this particular trade. Okay, and I've also taught my students to also walk out at obstacle level. So at 61.8 here is our take profit, where we got some fantastic risk to reward, because we were able to buy at low here after a break of structure. Instead of buying pinpoints, I have multiple entry variations which I have in my course. So I allowed prices to come back to make that retracement, because it happens after a break of structure. Price must come and grab an higher low, which prices did right here, came and grab an higher low. Then what happened? I was able to buy at that point and buy to the 61.8, which was an excellent trade entry opportunity. Okay, so beyond that particular trade entry opportunity, like I said, that was a trade that we exited at the obstacle. Okay, so beyond that particular trade entry opportunity, what is the next trade entry opportunity now? Okay, so here we saw prices break the last higher low point of price. This was the last higher low, and the break of structure has happened. How do we get our entry? Okay, we bring out our Fibonacci from the high to the low right here. Remember that we usually use what we know as entry variation tool. That is what, after a break of structure, the last higher low, as we can see here, is broken. Allow price to go for a 61-point retracement. Okay, so this level, which I'm going to identify pinpoint, is what is the 61.8 level, which is going to be our entry point. Then remember that what if we are selling, it is a retracement. So where is going to be our safest exit? We'll bring out our Fibonacci from the low within that structure circle that has been violated to the high, and my exit is going to be what? My exit is going to be at the 61.8. So this is my exit for prices, while my entry is what is at the 61.8 pinpoint right here. My entries are the 61.8 pinpoint, which we identified together. Then where is my take profit? Let's take all of this off. Our take profit is at this level, while our stop loss, we are just going to put our stop loss at, okay, let's make all of these things pinpoint right here. Our stop loss, let's take one of these out. Yes, our stop loss, we're going to slim it like this. So on this trade, we are going to be getting as much as a 1:3. In fact, a 1:4 risk to reward to 61.8, because we are entering pinpoint at 61, right? 61.8, which is where I put this horizontal line. We are putting our stop loss at the high, and this our take profit at what? At 61.8. So on this trade, we'll be getting a 1:4 risk to reward. Remember, it's a retracement, so we are exiting at what? At the 61.8. Okay, so since this is a retracement, it's going to be a beautiful ride to 61.8 for a 1:4 risk to reward. Okay, so this is how we are able to apply our easy top-down analysis. I've taught my students using multiple pairs, and they have been able to master and learn it, and they have been able to apply it and make wealth for themselves. Okay, so if you want more teachings on this, apply for my course in the link in the description below, and see you guys in the next teaching.